With the estate tax exemption at $15 million per person here in 2026, so $30 million for a couple, you may be thinking there's nothing you need to do in this area. You may be thinking that your estate will never grow to be more than $30 million. And so you just don't need to spend your time on this. You've got a lot of other things that you could spend your time thinking about. And while you may not ever have an estate worth more than the $30 million estate tax exemption, I want to talk to you today about one important thing that you need to be aware of and you need to take advantage of in order to optimize your estate position, your estate tax position. Now, if we've never met, my name is Liz Whittaberry, and I specialize in retirement planning for women and couples who have 2 to 20 million of investable assets. And most of my clients want to obviously maximize what they get from their retirement, but they also want to optimize how that goes to their heirs, whatever is left over. And so obviously want to minimize whatever tax might be paid. And so this is one key area that we need to think about. Now, the estate tax, that portability exemption privilege, let's talk about what that is and how that works. Under the current tax law, when the first spouse passes away, they could leave everything to the surviving spouse, and often that's what happens. And all of that goes to the surviving spouse with no tax. That's under current tax law, unlimited federal estate tax exemption for anything that you leave to your surviving spouse, assuming they're a U.S. citizen. Let's assume that you pass away first, you leave everything to your surviving spouse, there is then no tax due, but you haven't used any of your estate tax exemption. And now your surviving spouse has the full estate and they have just their estate tax exemption. Under the recent law, that changed. We can now allow you to transfer your unused estate tax exemption to your surviving spouse. So if you had in total a $30 million estate and you had in total a $30 million exemption, you're $15 million and your wife's $15 million or your husband's $15 million. When the first person passes away, they can not only leave all of the $30 million of assets to their spouse, but they can transfer their unused exemption to their spouse so that the surviving spouse still has all $30 million of assets and the $30 million exemption. Now I'm talking about, that at the, max limit just to make a point, because if you weren't able to port over that 15 million and you didn't use any of it, then when your spouse passed away, half of the estate would be taxable at that point in time. That would not have been taxable if you both passed away at the same time. So it's important to think through how things are going to flow. What amount of money is that going to be at what point in time, and what are your exemptions then? For somebody that has multiple millions of dollars, it's very important to port this exemption over. Let's say that John and Jane, let's use John and Jane as an example. John has a $10 million estate and Jane has a $20 million estate. John passes away first, and instead of leaving it to Jane because she has a $20 million estate, he leaves all $10 million to their son. That uses $10 million of his estate tax exemption, and Jane still has her $15 million estate tax exemption, but that leaves $5 million of her $20 million exposed to estate tax. Now, if instead John's executor files what needs to be filed and makes the election that needs to be made to transfer that $5 million of John's unused exemption to Jane, then she now has a total of $20 million exemption, and that then shelters her full $20 million estate. Let's say on the other hand that John has $2 million estate and Jane also has the $2 million estate. So in total, they have a $4 million estate, and they just don't see that they're going to have an estate tax problem. But John passes away. He gives the $2 million to his son, to their son, and that leaves $13 million of his exemption that is not used. And his executor files what needs to be filed, makes the election that needs to be made, and transfers that $13 million exemption to Jane. Now, it doesn't seem like she needs it. She has a $2 million estate, and she now has a total of $28 million exemption, her $15 million plus the $13 million that was transferred to her from John. But she invests in a biotech startup, and it suddenly becomes worth a ton, and she's able to cash out for $25 million. Added to her $2 million estate, she now has a $27 million estate. She would have been exposed to significant tax if John's unused exemption had not been transferred over to her under that portability exemption privilege. So that's one example of, well, it could make sense to just go ahead and make the election. Let's say, on the other hand, that John has a $2 million estate and Jane has a $2 million estate. And when John passes away, he gives his $2 million to their son, and his $13 million unused exemption is then available to be ported to Jane. Well, when Jane passes away, tax laws changed, and now the exemption is back to $1 million, and there certainly has been talk about that happening. And so her $2 million estate is now more than the exemption that's in place when she passes away. But if the executor filed what needed to be filed at John's death and made the election to port his unused exemption to Jane, then we would hope that that stays in place when any tax laws are changed, and she would then have his $13 million plus her $1 million at that time, which would completely shelter the taxable estate that would go to their heirs. So there are a lot of reasons that it can make sense to go ahead and take advantage of this portability exemption privilege so that you just maintain all the flexibility that you can maintain, because you cannot go back later and make the election. It has to be made within a short period of time after the first spouse passes away. And so you want to be aware of it and talk to your estate planning attorney, your tax specialist, talk to all of the people involved in helping you settle the estate of the first spouse to determine, does this make sense? Is this something that you should do? And what are the steps to get that done? And so with that, I just want to encourage you to always be doing everything that you can to maintain as much privilege and advantage to your plan throughout your retirement so that you can stay on your best path. And if you have any questions, shoot me an email. I'm happy to give you an answer.